Good morning. Welcome to CurrencyChange Daily Markets Update on the 21st of November 2013. My name is Laurent Guilbaud, Managing Director at CurrencyChange.com, your local solution for international payments. The key event of the day will be the Eurozone PMI, which is released this morning as a leading indicator. In the US Federal Reserve sent a clear signal that it expects to begin tapering in the next coming months, as everyone expects, to do less quantitative easing, the primary tool for going back to normal in terms of monetary policy. A key line from the Fed minutes was that tapering is likely in the coming months as the economy improves. The FOMC minutes released last night didn't really change the dovish tone by the recent Bernanke and Yellen speech, but yesterday's euro sell-off has ensured that the dollar as a currency was supported. For today, we'll have the Philadelphia Fed survey for November, which could surprise, with the Empire survey yesterday disappointing. In Europe, the Eurozone manufacturing PMI and services purchasing managers indexes, which are leading indicators, are due to be released. The Euro area PMI are forecasted to show positive return about the Eurozone bloc for both services and activity. The resilient euro may have bounced back from its month's interest rate cut from the ECB, were higher than before, but recovering from talks that the ECB is mooning negative deposit rates impacted it yesterday. The ECB could push deposit rates marginally into negative territory in an attempt to force banks to lend have been played down by different sources, not least because it would distort the working of the money market. The euro was clearly hit yesterday with a figure move by the story indicating this possibility of a negative deposit rate, which is currently discussed by the ECB. While this was arguably not really news, as the ECB have said they were technically ready for more measures, including this sort of things, at the last rate cut. ECB members have floated the possibility from time to time in the last few months. The threat did have a sharp impact on the euro, which fell significantly and was generally weaker on crosses as well. This should certainly keep the euro on the back foot today, but the tone will be affected by the Eurozone PMI, depending on the higher or lower. If they're lower than expected, the euro will drop further. That's what we're expecting to see for this morning. In terms of expectation for more ECB action, we could see some more actions potentially in December. Modestly stronger numbers are probably required to stabilize the euro, but in the absence of news, there should be euro support on the euro dollar around the 134 level. In the UK, the pound came off highs against the dollar yesterday after the minutes of the Bank of England of November meeting were released, where it was said there were uncertainties over the durability of the UK economic recovery, which surprised the market. Interest rates are likely to remain very low for at least 2 years until we reach this threshold, as they call it, on the unemployment rate of 7%. Sterling rose against the dollar, which was weighed down by subdued inflation, and after US Federal Reserve Bernanke speech said monetary policy would be loose for as long as needed. Meaning end of QE might happen lately than priced. The pound to the US dollar is currently increasing slightly, and all depends about the Fed tapering program. Sterling euro broke higher yesterday due to the weak euro, following this report that the ECB was considering a deposit rate cut to minus 0.1%. Any weakness in euro dollar may also drag down sterling dollar, where there is a strong correlation. Depending on the European PMIs this morning, if it's weaker than expected, both will go lower. The pound remained near 3-week highs against the US dollar, as demand for the US dollar has been under pressure when the market was expected yesterday at the release of the minute of the Fed. On terms of the euro, it dropped due to these negative rates. In terms of live exchange rate we can provide to you this morning, on sterling dollar we would be there 161 precisely, it's minus 0.2% versus yesterday morning. Sterling euro 119.84, it's up 0.5%. Sterling CAD 168.38, minus 0.3%. Sterling Australian dollar 173.17, and sterling New Zealand dollar 195.30. In terms of economic agenda for today, Key figures are at 8:30 UK time, the Euro manufacturing PMI expected 52, the services PMI expected 53 for Germany, and then at 9 o'clock the Eurozone PMI services, the key number of the day, expected at 51.9 versus 51.6, and then we'll have this afternoon at 1:30 the US dollar initial weekly jobless claim, expected at 335k versus 339. And then the manufacturing PMI expected 52.4 versus 51.8. At 3 o'clock, the Euro consumer confidence expected at 14. And then the US dollar Philadelphia Fed manufacturing survey expected at 15 for November. If you require further information, please visit now at CurrencyChange.com, where you can sign up to open an account for free with no obligation to exchange, or contact us as soon as you can on +44 027373 2686. Have a nice day.